when you found the currencies in the WebAuth wallet sitting down there at the bottom of the.
Bro, that blew my mind. There's so much change happening inside the WebAuth wallet right underneath everyone's nose. And you have to like use the wallet, I feel like, every single day to catch this stuff. Otherwise, you're not going to catch it, you know?
Well, yeah, bro, because Metallicus is like that organization that just does stuff, and they're not like every other crypto native organization that needs to make it all like emphatic and, oh my gosh, we're doing this. Hey, over here, we're doing it. Nah, they just do it. And then if you pay attention, you pay attention. And if not, oh well. They're not here. They're not here to like, they're not here for retail right now. I mean, they are in a sense a loan protocol and whatnot, but what they're doing behind the scenes under the hood, all institutions.
Facts.
So, yeah. But yeah, it was cool to see you have an aha moment, because when you have an aha moment, we all have an aha moment. Then I was like, damn. Because the crazy part is none of those have been announced yet, bro.
None of them. We got, and that's why I really want to go over that clip of John Ungerland, because he says we're going to go parabolic with announcements. So it's like everything that he had said in that little pitch that he said, and then we got 14 or what? Because there's 16 trust lines. So we got 15 other trust lines that we haven't had any announcements on just yet. And these trust lines for sure 100% look like stable coins that belong to credit unions that are participating in the banking innovation program.
Yeah, I mean, you literally called out the St. Cloud announcement before Metallicus even announced it, and you got that information off of looking at the trust lines. And there are freaking 16 other trust lines sitting there. Might as well share your screen, bro, and play that clip, unless you have the timestamp for it. I have the video log pulled up, but you know,
I have the timestamp. Go to it's you're talking about John Ungerland when he's talking about the parabolic news.
Yeah.
It's from 1630 to 1830, literally 2 minutes. And bro, it's the best 2 minutes ever.
All right, hold on. Let me play that real quick, because it's almost like it's inevitable as these stable coins are sitting there with trust lines open. They've already announced the St. Cloud.
Facts, bro. Facts.
All right, what time? When was the time stamp that you said?
1630.
All right, 1630. This will be our intro, and then we'll jump into today's freaking breakdown, because this one's going to be nuts.
Yeah, 1630 to 1830.
Here it goes.
Not getting, Metallicus. That's a real key.
Awesome. And then here's a question for both of you. How would you describe the current state of adoption of stablecoins and just even tokenized deposits or other on-chain financial instruments across global payments? And what are some misconceptions, and maybe what's something you wish just more people in the industry would know?
John, I'll let you take it first, and I'll comment.
Well, we're laughing because there's a couple of very significant data points that we get asked this question a lot.
Yeah.
So for the credit union leaders out there, and those institutions are particularly significant to us here at our business. I run into too many executives who believe that these are niche, new, unproven technologies, and I like to point out statistics like the market cap of the Bitcoin network alone, that one token, that one global network, the market cap value of that is larger than the entire U.S. credit union industry.
Yeah.
When measured in market cap, it's about 8x or close to 10x the liquidity of the credit union industry. So I think that another misconception is that consumers are afraid of this stuff because it's only used by underbelly types. The numbers around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only, growing bucket of electronic payments, and we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025. So
y'all better put your But if your seatbelt ain't on, put it on right now.
Man, I swear, bro, that right there, like more just like super alpha, super sure that these guys are winning the race. And bro, that confidence and name dropping those names, I don't know, like I don't feel like this guy is like capping on any level, bro.
Yeah, you can't just say those names and be like, oh yeah, there's gonna be some. He didn't like. He wasn't just like, yeah, there's gonna be some upcoming announcements. No, parabolic announcements.
Parabolic announcements, bro. Yeah.
Yeah, bro. I really like. We're gonna bounce back to what he says, but it's kind of late at the end of the podcast. It was in the last questions that he was asked, but he pretty much says that, look, anybody thinking that this is 5 to 10 years away is sadly mistaken. You know, if you think that this is all still 5 to 10 years away, you're gonna get left behind badly.
And it's dangerous to not be in these assets. He said, like, I'm taking your word, John. Right, I'm with you.
Max leverage, full 100%. They tell us, the financial advisors, not to be more than 5% allocated into crypto. Here we are, 99.99999% allocated. What money in the bank account? Boy, all our money's in the web off wallet earning yield right now.
Facts, bro. Facts.
All right, let's get into this today. This is going to be, hold on. Before we start, Trey White said, I'm listening to this at work right now. My coworker just said that crypto will never be big. Well, you better tell your coworker to listen to this podcast today, because we got some juice for you all today.
Oh, yeah. That's crazy.
That is crazy. The mindset, I mean, but not saying that you work at Walmart, but just this mindset that there's always got to be somebody to run the cash register, right? You, Trey, might be the person that goes to Walmart to spend your hard-earned money, giving it to the person that works the cash register. Well, your coworker could be the person that's stuck in the matrix and never escapes because they don't have the mindset to. It's part of the system. It's unfortunate, but you can't save everybody. I've learned that in my career. Kind of sucks, but it's true.
Facts, bro. Facts.
Sucks even more when it's a family member that you're trying to convince and they're just like, nah.
Get a real job.
Nah, crypto's a scam. Come on now. Crypto's a scam after 17 years. What kind of game are you playing?
Man.
They're the same people that'll be like, crypto's a scam, but then think money's real.
Yeah. If you ask them, hey, do you want $100 or one Bitcoin? Give me that $100. Zero clue that a Bitcoin is $100,000 plus.
Yeah, that's interesting, man. All right, so let's get started in today's podcast. What's going on, everybody? Welcome back to another Wealth 28 Club Friday. I'm your host, CYPRX, here with my co-host, Mr. Aquaman. And as always, just trying to bring you guys some of the realest information and research in the game, always keeping it 100 with you guys. Sometimes we do bring personal opinions, but the vast majority of the information that we provide in these podcasts is research-based via the largest organizations and institutions in the space. So we're going to continue to do that for you guys today. We're going to kick it off here on this saying that Aqua's just been reiterating to everybody, which I can't stress enough, needs to be, in my personal opinion, again, this is my personal opinion, backed with research via people with credentials, that everybody really needs to focus on building a passive income plan in crypto, a retirement plan in crypto, not via selling your digital assets, but learning how to put them to work for you and pay yourself with your crypto portfolio. So I'm not going to play this clip that Aqua had posted on his Twitter profile because it has some music in the background and I don't want us to get flagged on YouTube for copyright. But if you guys don't follow Mr. Aqua, make sure that you guys go over to his X profile and give him a follow. He's always dropping gems. So just in general, the quote that Aqua had provided here in this video, the key takeaway is that everyone is looking for an exit plan to get out of the crypto markets, right? Meanwhile, we have this massive transformative shift underway where everything is coming on chain. Doesn't that make a little bit of, it's like scratch your head on that one? So Aqua revisits this ideology that instead of creating an exit plan, everybody should be creating a retirement plan via putting their crypto assets to work. Aqua, I don't know if you want to speak on that real quick, bro.
Yeah, I mean, it's like this. It's like if you exit the market 2026, and let's just say hypothetically your portfolio is worth, I don't know, $2 million. I mean, technically you can get around 15-20% on that 2 million. And it just like, and that cash flow is probably more than your salary, right? So if you think in those terms, well, that's 2026. Imagine what 2027 is going to bring. So your portfolio in 26 was worth 2 million, right? But in 27, now your portfolio is worth 8 million, right? And you're still getting that 15-20% on that portfolio. And every single year, now your income is going up. And when you set up your crypto finances like this, you're going to stay in crypto for the long haul, and you're going to stay in crypto for life and be able to hand these digital assets off to your children, and they're going to do the same thing for your children. But it's just wrapping your mind around, okay, well, when my portfolio does go to this certain price, and there are protocols that are compliant, and regulations are in, and maybe there's some sort of like insurance that you get by deploying a certain amount of liquidity onto certain protocols or what have you, and that brings that level of comfort and safety. But yeah, once that's here, it's like you guys really got to wrap your minds around, all right, how do I get my digital asset to generate me cash flow instead of cashing out $2 million? And then it's like, what, I mean, if you have a good plan with that 2 million outside of crypto, like some sort of business, then more power to you. But if you're just taking that 2 million out to go and buy this, go and buy that, and pay for some lifestyle change for, a few months, you're going to run out of that money. Right. But if you, again, plan it to work for you, then you have a whole different, journey and a whole different future. Right. So
Yeah, I think too that, I mean, there's so much to say on top of what you just said. First off, like, too many people think too highly of themselves to gauge the market correctly. Like, too many people that are investors and should just be and remain investors think that they're traders, when in reality, they have no idea how to gauge market fundamentals or market cycles or institutional order flow or any of those things, because all they have to read markets is some apps on their phone. Like, if you think that you're going to be able to read the markets correctly, to time the top, to time the bottom, to re-enter back in, to reallocate after you've sold for fiat, because you think you're going to be able to build your bag bigger, the statistics of that actually working for you are not in favor of your portfolio growth in long term. I'm just saying, and I'm going to show you guys some perspectives from some industry leading experts, but that's just the fact. 98% of retail investors don't actually make money in this space. So this ideology and this notion that all these influencers provide for you guys on the internet, that you're going to be able to successfully sell the market top and then call the market bottom and re-implement all that capital to build a bigger bag, statistically speaking, is not, it's probably not going to work for you. So when you think of that, and then you favor what Aqua just said, hey, look, I'm in this crypto thing for life. Maybe a portion of your portfolio you do sell for stable coins to pay yourself your initial investment, but with those stable coins, you lend them out to earn yield, borrow against them if you want to buy yourself something nice. That's still in line with what Aqua's saying, is think in terms of passive income and not just selling for fiat and then putting all that money into your bank account and living lavishly off that money. You should be living lavishly off the passive income that you're making. I mean, honest to God, that's a mindset that still resides even in traditional finances, like have enough real estate or have enough stocks that pay dividends to just live lavishly off the passive income. Which is why I don't understand why so many people in crypto have and are such against passive income. It's weird, but again, it's a mindset shift that is required, and it will happen over time. So don't take that from myself and Aqua. We're going to just listen to one of our favorite high-end individuals in this space. She has credentials that are active at the CFTC, at the World Economic Forum, at the DTCC, and at Franklin Templeton. And she here goes on to talk about in this Milk Road interview, so shout out to the Milk Road for this podcast, just how everyday average individuals should start to learn about DeFi. Why? Because the banks are. And again, follow the money, right? Follow the smart money. So listen here to what she says to just back what Aqua pretty much just said to you guys.
And in order to understand even basic things like staking or various yield generating products is a step that a lot of people don't take. And I don't expect you to speculate on what we need to do to educate the world on financial education. Like, that's an important thing that everybody needs to do. I just hope that they take advantage of that, because I just don't know that they will, especially when so many people have cash sitting in, their savings account, and they could click one button right now and put it into a treasury. And a lot of people don't even do that. And that's not even using blockchain or crypto, right?
But this is where I do think that AI is going to be super helpful, because just like what we were talking about with MetaMask allowing you to now use your Google or Apple wallet sign in and not have to remember your seed phrase, right? I am not going to have to make these personal decisions, right? Today, if I want to take advantage of all of these different yield-bearing opportunities around my investment portfolio, I have to actively manage the use of my tokens in that manner. In the future, when I buy an investment portfolio, my onboarding document may have a little clause in it that says, would you like us to optimize the use of your assets? And if I just click yes, this may all happen automatically without me having to take an action, right? That is the beauty of smart contracts and the ability to automatically execute based on pre-programmed contract terms. A lot of this may just happen automatically on my behalf. And the same is true for cash, right? We talked about cash and what's going to happen with my cash and my savings, right? Today, every institution in the world, every hedge fund in the world, every corporate treasurer in the world, every single day, they sweep all of their undeployed cash into yield-bearing money market funds. And that money sits in those money market funds until the next time they need that cash, at which point they can sweep it out of the money market fund, put it back into cash, and spend it, right? This is too going to become an automated function that every person is going to have in their portfolio. Why would I sit with a stable coin in my account where I'm not earning yield on that stable coin? I would sweep that stable coin into a tokenized money market fund. And if I need that cash back, I can sweep it out of that tokenized money market fund and have that cash available within seconds. We already offer this.
Wow.
Yeah, I saw your eyebrows go up.
I did not know that. And as she's saying that, bro, I'm thinking, all right, well, on the metal blockchain, for these institutions to have their own blockchain, they have to have a subnet, right? And a subnet is 5 nodes. And what do we know about running a node and becoming a validator? You earn yield, 12%. So who's to say that these institutions and FIs are not going to do the same exact thing that she just explained right now to the T, but in metal, and locking it up in cycles on their nodes, aka their subnet, right?
Bro, I have a video. I mean, if you want to go there, like, we could go there, but I got a video of Sandy Call saying that institutions in the future are all going to need to run nodes if they want to be regulatory compliant.
Oh my God, yo.
Yeah, I'll play it real quick. I'll find it real fast while we play this other clip. But yeah, man, it's crazy, dude. And what you said, that's what you're thinking of, right? When you hear this, you want to know what I think of when I hear her talk? Wealth 28 Club, bro.
Yeah, no, for sure.
Like, we've been doing this for over almost 2 years now. Like, we're going on 2 years of just running these. You know what's so crazy is everybody's always in moments of these pullbacks, that like the one that we're seeing now, since we're on the topic of like, coming to a reality that most people aren't going to be able to gauge the market top correctly. I want everybody listening to this right now to ask yourself the question: did you trade your portfolio as of recent? The market cap in crypto has pulled back from the September and August highs over $330 billion. And are you still holding on to your positions? Most likely, because there might be a few scatters here that people are like, yeah, I sold some profits, but most people listening to this call right now are still holding on to their long-term positions. That's just most likely the fact. And so were you able to most recently gauge the market top correctly? Because there is a local top in the market that came in at $4.189 trillion. And who knows to say that the market couldn't correct lower from where we're currently sitting at. And so again, just to prove what this gentleman here is about to say to you guys, most people don't know how to gauge market tops and bottoms correctly. And so if you try to do that in the future, if you're not a trader who can sit at their computer and actually watch New York, London, and Asia fundamentals because you're at a 9-to-5 job, you're probably not going to successfully be able to do that. And so you're better off just holding, having a long-term perspective, selling out of your initial investment to pay yourself and make your investment risk-free, which is a smart idea, but just having a DeFi plan, a yield generation plan, compounding, buckling down, picking some blue chip digital assets and earning. And understanding that cash is devaluating at a rapid pace year after year. It's like 3% or something year after year, which is insane when you can go make 4% holding freaking XPR right now and benefit from price appreciation. And on metal too. You don't have to run a note if you want to earn yield on metal, since we're on the topic. You know?
Yeah, and you get your rewards in real time too. So
every single day, bro. I
Every
claim
single
them
day.
joints 10:30 p.m. at night. I'm claiming, compounding, and smiling.
Facts, bro. Facts.
You know, so listen to this gentleman here. This is the co-founder of Tether. Now, I know a lot of people have this distaste in their mouth for Tether. I personally don't. I've been an advocate of always trying to show people that Tether is most likely not going to collapse, might not be the leading stablecoin provider in the future, but I don't think it's going to collapse like most people have thought for the past consecutive couple of years. Regardless, this gentleman definitely has some insights via just who he is in this industry. And listen to him tell you guys the same perspective that we've been relaying here in the CYPRX 1228 Club, that if you're not a day trader in these markets, you're better off, instead of creating an exit plan, creating a DeFi plan long-term, right? A passive income plan with your portfolio. Take a second here and listen to this gentleman speak.
With 2% or whatever, if I had that minimal exposure, I would not pay that much attention. If I had to ride through a downturn for a couple of years, I'd say whatever. And the reason is this: the greatest risk when you are involved in a investment that has a very long trajectory, but that's got volatility along the way. The greatest risk you have is that you exit and you never get back in. And that risk is so great, in my experience. I've never exited. You know, I just have held my crypto. Could I have done amazing if I had sold at the lows and, you know, or sold at the highs, bought back at the lows? Of course, but I never knew what the lows were. And I never knew what the highs were. So when people talk to me, as they do all the time, and they say, it gets kind of annoying sometimes too. Oh, Bitcoin dropped 10, 15%. Should I sell? It's like, well, yes, if you literally are going to miss your rent because you needed that money, but you shouldn't have had that in there if you were in that situation. But no, you should not if it's just money that's being put in the speculative bucket.
Bro,
yeah.
I'll just say this. This is the co-founder of Tether. And what does wax mean? I don't know what that means. But he's the co-founder of Tether. That alone, him having this humility to admit, I'm not going to be able to time the top or the bottom. I feel like so many other retail traders need to like listen to this and like adopt this humility, because at the end of the day, if this is the co-founder of Tether saying this and you work somewhere that is not related, like if your resume does not compete with Mr. William Q, you should consider what he's saying right now.
Yeah, but people won't, bro, because their ego, you know, their ego and the influencers that are out there with the 100,000 follower count, and they're like, yo, you guys, when XRP is $50, it's going to pull back to $5. And this is what the influencers tell you, y'all. When XRP hits $20, I'm going to tell you guys when it's the time to sell, and then follow my lead. And I'm going to enter back in at $5, y'all. Come on now, we got this. And they motivate you thinking that that's a reality. Yeah. But that influencer doesn't know that that's going to happen. That influencer doesn't know what price is going to do at $20 or at $30 or at $50. And what if it does hit those levels? You sell because you follow some influencer thinking and telling you guys that that's a smart idea. The market never pulls back. and you're
And that's
priced out.
it, and it explodes even further to the high side.
Now again, because I'm a day trader, I actually have a completely entirely separate portfolio for just day trading. I'm not against taking profit or selling or anything, but I'm just talking about the average person on Twitter and on YouTube with a couple thousand to a couple, maybe $100,000 in their portfolio. You're probably not going to guess the market correctly, right? So
Facts, bro.
why base your entire future and your family bloodline's future on a guess instead of guarantees?
Yeah.
You know,
And what I could see now too why you're playing this clip, because this goes hand in hand with what John Ungerland is saying is being dangerous to not be in the markets
Mhm.
right now.
And I think too that the more like more people need to question these influencers. Like who the heck are they to tell people that XRP is going to go to this price or that they're going to be able to do this or do that in the markets? It's like not enough people are questioning the intelligence of the influencers that they're listening to, and instead just taking what they say and running with it as if it's reality. And it's like, nah. Like tell these influencers to show y'all some credentials, you know, show them that they've been able to run, you know, a 7-figure portfolio trading successfully in the markets. In CYPRX, we got that proof. You got 3 mentors in CYPRX that are millionaires and 1 mentor that's a multi-6-figure investor.
Facts, bro. Facts. That's that real talk. That's what really needs to, like, people need to start pulling cards. Like, show me your portfolio, and show me your portfolio your first year, and show me your portfolio what it looks like today. Right?
You know, and it just not enough people are. And I'm telling you, man, there's going to be an onset of people that continue to say, I used to say that there's a group of people that invested in crypto and a group of people that aren't. That's what the future is going to be like. But now I'm more like even smaller. There's going to be a group of people that invest in crypto. And then there's going to be a group of people that invested in crypto between now and 2030 that earned yield on their crypto and compounded their portfolio. And those are going to be the new 1%. Everybody else that just invested in crypto is going to be like 2, 3, 4, top 5%. But the people that compound between now and then, stack and scoop up more shares of block space in this game, y'all are going to be the winners, the true winners.
Facts. And super patient too for the ones that create that cash flow, because once your cash flow gets to a certain comfortable amount coming in, you're like, all right, I'm chilling. I'm making great streams of income coming in. So this can take another 2 years before it levels up again. I don't mind, because I'm Gucci right now where I'm at with this cash flow that's generated coming in right now.
Same people you guys who ever want to do an influencer check this out. Check this mindset out. The same influencers that are telling you guys that currencies are collapsing and that the dollars are going to be replaced, like the dollar is the global reserve currency now and it's going to be replaced in the future, blah, 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 are the same people telling you guys that they're going to sell their crypto for fiat at some high price. How much sense does that make?
Zero.
They're the same ones telling you guys that BRICS is going to replace the US dollar and the dollar's going to zero, but then they're telling you guys that in the future they're going to be able to sell their crypto for fiat to survive. What? Moment in silence.
Yeah, that don't make no sense, bro. That don't make no sense.
You know, it must just be my logical thinking. I don't know, you know.
That logic, bro, that logic kicked in, that firm, you have a better understanding. So it gives you that logical mindset to understand it the way you just spit it, bro. So
yeah, spitting facts over here. Every day, your crypto could already be working for you. I said in this post, Metal XPR loan as an example, earning yield, growing, compounding. While most people wake up and start the grind for a paycheck, DeFi lets you wake up wealthier than you were yesterday without having to sell a single coin, even if you're just earning 10 cents a day, right? Your net worth is growing, scaling.
Yeah.
This isn't a dream. It's happening right now on chain in the METALLICUS ecosystem. And the Metal ecosystem pays you every day for providing liquidity, staking, and securing networks that will power the new financial system. Just like Sandy Qual just said to you guys that these banks, they're going to be the ones doing this stuff. When the average person finally realizes that they can earn yield 24/7 in real time with no middleman skimming the profits, it's game over for the old way of money. I encourage you guys, and I know so does Aqua, to learn the tools, position yourself early with knowledge, and let your assets do the hard work for you, you know?
Facts.
So let's take a second and listen to this gentleman here. He goes on to talk about how he believes in the future, you should be putting your assets to work. This is John Ainsworth and the DeLand CUSO, or Credit Union Service Organization Chief Information Officer, John Ungerlin, discussing lenders in the stablecoin era. So take a second here and just listen to what he says.
Important consideration where, we preach it, but this is an example where I think we're actually delivering it. So
yeah, I would say kind of a philosophical idea that guides us here is this ancient saying that money is the mother's milk of politics, right? So when we talk about local financial institutions and why we want to see them connected to these new types of money, it's because it's very easy to imagine a world where all of finance gets hyper consolidated through a disruptive event here. And, it's as simple as if local financial institutions aren't preparing a strategy where they're going to plug into stable coins, offer their own stable coins, connect to Bitcoin, connect to Ethereum, then they're, de facto disconnected from the money business, unplugged from the money business. And as you alluded to, JP Morgan and all the Wall Street firms and Bank of America and everybody else will step in. There are already Fed white papers out there that show that those players are testing and proving their own non-NACHA, non-ACH, non-EFT settlement rails. So why we wouldn't be doing the same, I don't know. That's why we didn't sit around. We know that the large players are finding faster, better, cheaper ways to move money. So we went ahead and built the gateway that local FIs need for that. Look, it's simple. I want my kids.
I just want to pause right there. He said we built the gateways that are going to allow this to happen. And then at another point in time in the video breakdown, he mentions that this gateway is Metallicus, just for the record. So just remember that.
To live in a world where if he wants to build a business or buy a house or secure his digital wealth, and he doesn't have to be a lone wolf and a maverick and store it in an external wallet somewhere. He can put it to work in his local community, and he can make it part of the community economy, and he can work with local financial institution representatives that have a bigger purpose in mind, a higher purpose in mind than just me hodling my Bitcoins in my hardware wallet. That's easy enough to do. I've done that for a long time. What I want to do is I want to put digital wealth to work in the local economy and community and help it enrich a cooperative network, as opposed to just squat on it myself in a digital asset wallet. There doesn't seem to be a lot virtuous or sustainable or noble or scalable about that. So we think it's really important for the diversity and heterogeneity of the U.S. banking system to persist.
So long story short, right? Dude goes on to talk about how you shouldn't be sitting there with idle crypto. You're going to want to be putting your digital assets to work. And he also specifically mentioned that these banks, these institutions that aren't preparing a futuristic strategy where they're doing this with their crypto, they're lacking. That's a huge statement.
Yeah. I forget. I think the timestamp is around the 20-minute mark. I forget the timestamp, but he had said also that if you could beat your competition with cheaper and faster payments, or you can move money cheaper, faster, and don't lose as much money as the average FI, then that's checkmate to your competition.
Yeah, I think we're going to play that one next.
You're gonna play that one? Okay.
Yeah,
Okay.
because I have these documents here because, as always, myself and Aqua, we're just trying to always show you guys it's not just coming from like people that are involved or interconnected with the Metallicus ecosystem. Like, this is coming from all angles. So I'm just going to quickly read 2 documents and 2 posts that I put out to you guys just to show you guys context from other organizations saying the same exact thing, that, if you don't adapt, you're going to get left behind. And this is not going to happen in 5 to 10 years. This is about to happen over the next, 12 to 18 months type time frame, where things are really about to start to scale up and revamp. So I said here, institutions are no longer on the sidelines. Reports show we are now only in the first inning, we are only in the first innings of greater institutional adoption, with firm conviction to build this industry into the future. The categories leading this revolution are stablecoins, asset tokenization, DeFi, and smart contract platforms. They've already proven their staying power. So This is an Apollo, obviously, of course, Apollo investment management firm. They have like over 700, I think, $1 billion of assets under management. This is their investment thesis paper from this year. And here it goes on to talk about how many investors think that the Bitcoin trade is over. At Apollo, we believe that we've just crossed the chasm and we are in the early stages of mainstream adoption. That's huge. You know, why would you want to sell out of a market that is about to, you know, we're only at not even 1 billion users in crypto yet. I mean, come on now. It says it's still early as many still don't understand the concept of mining, proof of work, and infrastructure, which makes Bitcoin the most computationally dense network in the world. As you heard John Ungerlund say, that when he's, you know, when he's talking to these institutions and they're like, hey, crypto is a scam, what he refers to is that Bitcoin, the Bitcoin network, and the market cap of Bitcoin itself supersedes that of the credit unions. So wake up. How are you as a credit union going to say that crypto is a scam when the crypto market cap supersedes the market cap of credit unions? Like, come on now, wake up, y'all. Yeah. So this was just a very interesting one to me. And then he says, this document, you know, how we value crypto assets. Again, this is coming directly from one of the biggest asset managers in crypto. Many pundits often describe crypto assets as an impossible to value due to the lack of intrinsic value. It reminds us of valuing the internet in its infancy stages. In early 2000, Forbes articles suggested that the internet may be just a passing fad as millions give up on it. Today, the Mag 7 has a larger market cap than that of the GDP of many developed countries. You know? You're muted, bro.
Yeah, that's a guap, bro. Jesus Christ.
Yeah. I love how they even sourced a little picture of the Daily Mail, bro, from the early 2000s. You know, imagine if you were alive back then, like investing, and you read this and you were like, yo, I read that newspaper and I faded it.
Yeah, facts. Yeah, it's a super throwback article.
Yeah, this was good. So just to continue to end this, it says, by way of example, smart contract platforms and best valued using metrics such as daily transactions, gas use and burnt, inflation, TVL, whilst DeFi applications where revenue is passed back to token holders are better valued for using more traditional DCF models, combined with crypto native data and deep understandings of technical architecture. The investment team's long-term crypto experience and focus on being at the forefront of understanding market innovations makes Apollo well placed to assess investments in this rapidly evolving asset class. To put it another way, if we had had tried to historically invest in crypto markets based purely off traditional valuation metrics, they would have failed miserably. A deeper understanding of the underlying architecture makes structure and relationships required. So, you know, learn. It's not hard, you know, pay attention to detail, build those networks, build those relationships, join communities that are actually tapped in. This is another document that mentions the terminology adapt or get left behind. This is from the Illumin Digital Unlocking the Path to Secure Successful Digital Banking Transformation Report in partnership with the Financial Brand. And if we come over here, it talks about the cost of waiting is higher than most financial institutions realize. It's no longer a tech decision. It's about keeping pace, right? Then over here, it says old habits die hard. Banks often stick with outdated system because that's what they know. They made decisions based on the best information available at that time, but those systems are now anchors that prevent growth, said Abel, one of the individuals from Lumen Digital. They will no longer be able to compete or maintain the share of wallet in this environment. If you don't make the change to a digital partner that powers speed to market without disruption and has strong partnership models, you risk being left behind.
More you better.
Yeah. And so this just goes hand in hand with the clip that Aqua just had us play. We're going to listen to the full slew of this from about 16 minutes. We'll skip a little bit up just because where we left off, we played this a second ago, where he talks about partnerships that are going to be announced that are going to go parabolic here in the near term, mentioning the likes of Amazon and Apple and Google. But he also talks about, you know, this ideology behind being left out of the new payment system. So just take a second here and listen to what this dude says. John Ungerlund, Chief Information Officer at Deland.
Yes. I run into too many executives who believe that these are niche, new, unproven technologies. And I like to point out statistics like the market cap of the Bitcoin network alone, that one token, that one global network, the market cap value of that is larger than the entire US credit union industry. when measured in market cap. It's about 8x or close to 10x the liquidity of the credit union industry. So I think that, another misconception is that consumers are afraid of this stuff because it's only used by underbelly types. And, the numbers around payment channel growths just don't support that. Year over year, we're seeing that digital asset payments is the largest, if not the only growing bucket of electronic payments. And we're about to go parabolic on that with announcements recent and coming from folks like Square, PayPal, possibly Google, Amazon, Apple weighing in here in third and fourth quarter of 2025. So, I think that there's a misconception that the financial institutions get to decide what kind of currency or money merchants and consumers use. I see it the other way around. I see it that, this technology has flipped the table, where the merchants and the consumers are now in control, and they actually don't need an intermediary. I think there's great use cases and values that intermediaries and institutions can bring consumers and merchants, but only if they're doing the work of understanding what these technologies do and how to incorporate them into their business models. All of these technologies are fundamentally about killing financial institutions. They don't have to kill, but that doesn't have to be the outcome. I think that consumers are not wired to function as trustless, completely disparate, totally decentralized entities. They want a partner. They want a local organization to work with. They want somebody they can trust. They want good retail service. They want the technology and operational expertise of their institution backing up and protecting their assets. So, I think there's a lot of payment volumes and deposit volume and lending volume and consumer adoption and large organization statistics out there that would open people's eyes to the fact that we're very clearly in the era of stablecoin adoption. And I think we're going to expediently move into the era of other digital asset networks being used for payments and settlements. And look, if a financial institution doesn't have a strategy on this, the reality is their competitor is going to be able to move and settle money at a fraction of the cost compared to them. And that's an end game reality. That's a checkmate. If you're in the money business and your competitor can do it exponentially faster, cheaper, and safer than you, then you can't compete. And that doesn't have to be the case for local institutions.
I think
Bro, the writing is on the wall when he says that, bro.
It's undeniable, man. I mean, people at the end of the day, they will believe what they want to believe and they'll fixate on what they want to fixate on. But the truth is that, we're entering into a new era of finance, and the best bet is for you to have a long-term horizon and stop thinking that you're just some advanced day trader that's going to be able to gauge everything that's going to happen between now and 2035 correctly. And instead just buckle down and suck it up that you're probably not going to be able to do that. So instead, passive income is the true way, because looking back, compared to people, one that takes the yield approach and just compounds between now and then, and the one who doesn't, most likely the one that compounds and builds yield in their portfolio is going to be much more successful come 2035, instead of thinking that there's some advanced day trader. So check this one out, because I want to finish this spiel and then we'll kind of just leave it open. But there's another video clip here. This is from about 2 minutes and 30 seconds. And this is where I'm going to get into the collaboration with something that one of our other favorite guest speakers, the blockchain leader at EY, Paul Brody, said in a recent podcast that only has 45 views. And so you just heard John go on to talk about how they're integrating stablecoins. Okay. Well, here in this clip at roughly about 2 minutes and 30 seconds, he talks about how they've been preparing to build bridges. They've been preparing to integrate their backend systems into crypto. And this just goes hand in hand with what this gentleman here says, Paul Brody, that banks are adopting crypto and crypto firms are integrating banking licenses. So just take a second and let's play these video clips. And then another thing that Paul Brody here talks about is this ideology behind how a reservoir dam has been completely lifted with the new regulatory clarity and the new approach that we're seeing. And I'm going to play an old clip from one of our old podcasts that myself and Aqua had hosted, showing you guys this liquidity reservoir in which Paul Brody is talking about, because the amount of money is honestly unfathomable right now, considering that we're at $3.7 trillion in market cap. It's hard to believe that we're going to see a $50 trillion plus market. But you know, when you really do research into the amount of money that's in TradFi that's about to come on chain, those numbers start to seem a lot more realistic than one perceives. So just take a second here and listen to this real fast.
You know, kind of tell me about, you know, how this came to be real.
Yeah, we're excited for a lot of reasons. We've been tracking this space of digital assets now for going on 10 years. You know, I in particular have been a student and passionate about this space for a long time. And as an organization, we've been building intellectual property and preparing for precisely this moment for quite a few years now. And so one thing that I would stress is, you know, what's energizing to us is that we're not a crypto startup firm, and we're not merely slinging, you know, outside wallets. We have worked inside the banking and payments and fintech space for a couple decades, and we have many hundreds of years of experience on our staff working inside the banking and fintech space. And what we've built is a bridge to allow traditional financial institutions to connect to these new worlds of DLT and decentralized money movement and storage. And, you know, with that being a $4 trillion market and growing, we think it's really important for financial institutions to stay plugged into money networks if they want to be in the money business. We see what's happening with stable coins as very significant. You know, regulatory and legislative clarity came first in the stablecoin sector, and I believe is coming elsewhere with other assets. And we see stablecoins as the doorway through which everyone's going to have to walk into this broader world of digital assets if the dollar-denominated economy is going to stay competitive and cost-effective and safe, you know, in the future of money. So we're really proud of what the St. Cloud team has done, that they're forging a path and being luminaries for others to see that, you know, digital assets aren't inherently scary and risky and dangerous. And also that they're showing the world that you don't have to split your banking business in two in order to service digital assets. You can connect the wealth of your community that they're storing in these new networks and service it as part of that core banking operation, which we think is really important for.
They're using Metallicus, bro.
Absolutely.
That's the second time, by the way. I want you guys to pay attention to that key vocabulary. He talks about the bridge, this gateway, right, that they've created, because it's going to play a key important part when he tells you who it is that they chose to do this with. But so, you know, he just mentioned also too that stable coins are going to be the doorway for this. Keep that also in mind as we continue down the threshold. So now let's head over here to Paul Brody. You just heard the gentleman, John, say, you know, we've been in traditional finance and banking. We're not a crypto native firm for decades. And now we're starting to really pay attention and lock in to integrating crypto into the core services for our clients and our, you know, our business partners. That's huge. That's a huge, you know, publicly addressed statement. And that just goes hand in hand with what Paul Brody here says. So take a second and listen.
So I think a great place to start is, I guess, to ask you from where you're sitting, what's the state of play with blockchain and financial services today? You know, where are we and what are you seeing?
So we're at the beginning of what I expect to be a long game of regulatory and operational and business convergence. We are relatively few years away from a point where it's not really going to be possible to tell the difference between an on-chain financial service and an off-chain financial service. The differentiation between TradFi and DeFi is basically going to disappear. And there's an old saying, and I don't know where it came from, but organizations that oppose each other tend to eventually come to resemble each other. And that's exactly what's happening. So the banks are busy getting into crypto, and the crypto companies are busy getting banking licenses, and everyone's getting ready to launch a stable coin. So eventually these things are going to converge to the point.
Everybody's busy getting banking licenses. Did you hear that? Yes, bro.
He also said, and everybody's getting ready to launch stable coins.
Yes. And
And
who already has their banking license and it already has the ability to launch these stable coins.
like, come on, yo, it's so crazy. People are sleeping on this knowledge. Look at this announcement. This is literally just from a couple of weeks ago. Metallicus named finalist for 2025 CU Credit Union Times Luminaries Awards. For what? Metallicus was named a finalist for custom stablecoins for credit unions and institutions, a first of its kind solution. Again, a first of its kind solution. Y'all, come on now. What?
Yeah.
Enabling credit unions to issue branded compliant stablecoins.
Exciting times. And then I'm thinking too about what Marshall just said on X the other day. Metal will bring the first $1 trillion in stablecoin liquidity.
It's almost like you know something.
Man.
Yeah, let's finish listening to this dude here.
Point where it's not going to be really visible who's doing what.
I love that saying, actually. I haven't heard it before, but that's a really interesting way to put it. In terms of, touching on or starting off with at least the big established financial institutions and the big corporates, what is the state of play from what you're seeing? Has there been a lot of progress made in terms of how they're engaging with blockchain and digital assets? Are we still in that early experimentation phase, or are we seeing a much more clearer route to scaled up adoption?
We're in the damn just broke phase. So that's
Scaled up adoption.
We're in the damn just broke phase. So
yeah, bro. Yeah, so hold on. Let's show the viewers what damn he's talking about. Because if we go,
yes, please. Oh my God. Oh my God.
Mind you, this video that we're showing you here is only from 2 days ago, has 42 views. If we go back to a video that we shared over a year ago on this podcast, this has 941 views now. And this is that damn that Paul Brody is talking about. This is back from a year ago. Take a second here and listen.
yes, right. This part of the conversation is called the Great Liquidity Reservoir. And I'm going to struggle to convey just how much capital there is behind this regulatory dam, because the numbers are just monumental, right? How much money is there? Well, let's start with the most liquid of the liquid, right? Bank deposits, stocks, and bonds. $400 trillion, right? Certainly more than my current retirement nest egg, and plenty of money to buy you a nice place in central London or San Francisco. Right, 400 trillion. There's another 379 trillion in real estate, right? Gold is 13 trillion by itself. And then you get to the entire crypto ecosystem is like 2.5 trillion, right? I'm not going to say all of this money is going into crypto, but quite a lot of it will end up in crypto, and a huge amount of it is going to end up in tokenized digital assets.
Bro, that's coming from the freaking blockchain leader EY saying that a huge portion of this money is going to roll into crypto. And then a year later, now he's at this on this panel discussion saying, look, that regulatory dam is unlocked. What?
The dam has just broke open.
now hold on, because bro, I'm not done blowing your mind. This is the last two clips I got to play, because if we continue to listen to what Paul Brody says, he specifically mentions stable coins. And then remember that the gentleman, because I told you guys to pay attention to the key vocabulary word, the gentleman John said they've built a gateway and a bridge and a solution to onboard stable coins, and that's going to be this doorway. And I just showed you guys how Metallicus was chosen for this solution, where they can provide these credit unions the ability to build compliant stable coins, right? Listen to what Paul Brody here says, how there's no solution yet for this, but then the gentleman John says that Metallicus is that mother trucking solution, y'all. This is crazy. Check this out.
Run that track. Run that.
A scaled up adoption.
We're in the damn just broke phase. So that's really what's happened. So for the last I want to say 5 years or so, prior to about, I want to say April, May of last year, basically the world's major banks were looking on the sidelines, and some of them were looking on the sidelines and saying, I want to be in this business, right? I can sell stuff in here. And some of them were looking from the sidelines and saying, wow, I hope this thing never comes for us. But either way, people were looking on the sidelines, but not doing anything. So there was a little bit of testing and studying and playing, but no substantial action. Once the ETFs got approved, and then particularly, so there was MICA in the European Union last year that went into effect, and in the US there was a Trump election, and then the long before the Genius Bill got written and signed, everybody knew it was going to happen. And that basically sort of triggered the dam breaking. And so like crypto, like stable coins, or hate them, it doesn't matter. Everybody is now into this market because they understand that it is going to be absolutely transformational. So we are now in the stampede to enter the market, where people are suddenly going from strategy to, okay, I need to do this. I need to participate. And people are getting quite serious about this question of, well, how will I build some kind of differentiated competitive advantage in this market? And I don't think anybody yet has a really good answer.
Too bad we weren't on this fucking podcast.
Yeah, because I would have told Paul Brody, hey, you need to go check out Metallicus, because here we are over here. So again, he's talking about how everybody now is about to stampede into coming in, but there aren't really any good solutions yet for them to build out stablecoins. Well, here sits Metallicus. Listen to this gentleman again, John Ungerlin, Chief Information Officer at the Land.
Of dollars, the Bitcoin network has now serviced and operated more hours without error than the Dow Jones has in its entire existence, because it's a 24/7 network. You know, a lot of these things like stable coins and digital assets and Metallicus technology, these things have been around working flawlessly for years. These are definitely established technologies, and the reason that we built and have launched and have live the digital asset bridge and vault is that we know that financial institutions need to be able to treat consumer digital asset wealth across a number of legitimate tokens with large market caps and significant utilities. They need to be able to service that wealth as part of their consumer relationship and consumer profile right inside their existing business. They need to be able to use it as deposits. They need to be able to use it for loan collateral. They need to be able to use it to generate payment income and revenues. They need to be ready to push back on big providers out there that are trying to disintermediate them and unplug them from the interchange income streams with digital assets. And they're not going to be able to do any of that if they're not first and foremost vaulting the digital assets inside their traditional FI. Now, when we built this thing, we built it as experts both on the core technology and payment side of the world. Again, since we're not simply a crypto wallet startup. And we built it with the full knowledge that, there are things that FIs do very well, financial institutions do very well, and there are things that the DLTs do very well. So we blended together the best of what financial institutions do as data processors and customer service organizations and retail outfits, but we didn't lose any of the benefits in terms of security, cost, efficiency, speed of these DLTs and networks. And we didn't, breach any of the integrity of the technology on either side with our coin to core gateway. But, our main concern is to make sure that the FIs hold.
Did you just hear that vocabulary? Our coin to core gateway. And he just said that they did this. He said Metallicus is a proven technology that they're doing this with to build these bridges. And bro, look at this. Metallicus and D-Land partner. Like, anybody can go and read about this. This dude's not capping. So you got Paul Brody talking about this liquidity reservoir that is unlocked, and now all these institutions are about to start to rush in to try to figure out how to build compliant stable coins. And here you have Metallicus sitting at its core, a battle-tested technology that has the ability to do this. Then, like, it's just so crazy, bro. Exactly what you just said, what Marshall Hayner tweeted out. Metal's going to be the first blockchain to onboard $1 trillion in stable coins. That's huge. And then this is the last thing before I introduce Echo. I'm sure all of our guests know who Echo is, but we'll welcome him in. I just saw him tap in. Look at where freaking Marshall Hayner is going to be here in just a couple of days. This is coming up. I know that this is surrounding circulating in the Metallicus ecosystem and TDBM community. But look at this. It says join over 1,000 credit union professionals to network, learn from renowned industry leaders, and engage with cutting edge solutions. Right? You have, again, Paul Brody saying there isn't a solution, but you got John saying, hey, Metallicus is that solution. And here is none other than Marshall Hayner sitting at this freaking event. So if you go to upcoming events, you click on this event here, come over to October, click on the event, and you come right down here and you go to speakers. And here's your boy, Marshall Hayner, is going to be right at this event with thousands of credit unions, giving them the solution to build out their own compliant stablecoin. I dropped my mic. I'm done. Come on now, y'all.
I believe Arena's going to be there as well. Arena Birkin.
Yeah. I haven't looked. I stopped scrolling after I saw Marshall's name.
Yeah, right. Yeah, that's actually that key vocabulary that you just tied together and made it come full circle like that, bro. Yeah, bro. That's we solved the case, bro. Case closed. Case closed.
I mean, and at the same time, like it's not, none of this is by coincidence. You got the CFTC coming out literally this week. And what are they talking about? What did the D-Land CEO, or what is the co-founder just say? He literally just said, they're going to need to be able to post these digital assets as collateral. It's right here in the docs. Like if you go and you read this, where's it at? The report here. Hold on, give me a sec. It says right here. This is the report from payments, and it says their collective warning to the community banks was blunt. If members move liquidity to digital asset platforms that can also lend and settle payments through stablecoins, community institutions risk being disintermediated from their own revenue engines. They're talking about lending, borrowing, given the ability for these institutions to post stablecoins as collateral, right? They're going to need that ability. And what is the CFTC announcing this freaking week? This is from September 23rd, 2025. The public has spoken. Tokenized markets are here, and they are the future. For years, I've said that collateral management is the killer app for stablecoins in markets today. Today, we're finally moving forward on work of the CFTC's Global Market Advisory Committee from last year. I'm excited to announce the launch of this initiative to work closely with stakeholders to enable the use of tokenized collateral, including stablecoins. The CFTC continues to move full speed ahead at the cutting edge of responsible innovation, and I appreciate the support of our industry partners. Acting Chairman Pham from the freaking CFTC. Like this, anybody that's saying like regulations aren't about to catch up, y'all are, come on now. What's up, Echo, man? I see you shaking your head, brother. How are you, man?
Yo, thank you very much for having me on, Aquaman and Cypress. No, I mean, you all said it best. I mean,